Wama! 2022 and now 2023, it's actually kind of been a rough year. 2022 set up for a huge issue in the real estate market where people have bought homes at extremely high prices and now just cannot, not even close to selling their home for the same amount. So there are a number of people that are actually struggling substantially, and there's a lot of people that are probably doing fine but are genuinely worried, which is making the real estate market really slow down quite a bit. There's a number of factors to that we're going to talk about. First, the good news is that on October 25th, just a week ago, the Bank of Canada announced that they will not raise interest rates. And I think for a lot of people, that is a huge breath of fresh air. Not having to pay any more than they already do if they, for example, have to renew their interest rates, which is a huge issue. So I knew quite a few people that have 1.5%, 2%, 2.5%, 3% fixed rates, and that in a year or two, or even now, that when they're going to go renew, they look at their finances and they say, man, I don't think I can afford my house anymore if I have to renew at 6% today's rates. So the fact that the Bank of Canada didn't increase interest rates is very good. And their goal really ultimately was to slow down the real estate market. I see on the Bank of Canada website that inflation is about 3.8%. It's kind of interesting why they increased interest rates in the summer, because that really slowed things down immensely. I mean, if you have to think about it, let's say you know someone that wants to buy a house, or you are someone that wants to buy a house. Well, although the house prices are down, there's a lot more houses. We'll talk about that in a second. You have to qualify. You have to be comfortable with paying a mortgage at around 6%, which is very expensive. I mean, for so many years, we were used to 2%, 2.5%, 3%, that this kind of number is just ridiculous. Like, you could easily increase your payments by $1,000 for having the exact same, going from 2.5% to 6%. But on top of being okay with a mortgage of 6%, there's a stress test adding 2% when you qualify. So that's why a lot of buyers are going to struggle to even get mortgages, is that although, yes, the banks or lender may say, yes, you qualify, you have good income, good credit, we verify all these key things, you have money in the bank, you have your 5 or 10% or more down payment, and you can qualify for a mortgage, but you actually can only qualify for the amount as if you had 8%, so an additional 2% to whatever we're going to give you. And that's become very difficult for buyers. Another thing for buyers, I would have to say, is that because it's become very difficult, there's only a select number of people that can actually, I think, genuinely, comfortably afford a home these days in terms of just outright buying. Of course, there's lots of people that can afford a home, but I think people that are either first-time home buyers, it'll be a struggle. People that are not super well set up financially, it'll be a struggle. When you go and see homes now, think about it. There was a report the other day that there's now 4 times. Really, I mean, the report wasn't that there's 4 times as many homes, but it is basically 4 times as many homes since the beginning of the year. I remember in the beginning of 2023, things were a little bit slow, and then things really picked up in March because there was basically 1.5 months of inventory. And that is considered a seller's market. So anything below 3 months of inventory, it means that on average, it favors the sellers. 1.5 months inventory means that if it would take 1.5 months, if there were no new homes on the market, to sell everything. So chances are your house was going to sell. And so prices were still actually increasing back in the spring, which has a lot of my clients asking, hey, should we hold off on selling our house until the spring? And I would say this is the first time that I can't say for sure that prices would go up even because of the spring. In fact, there's no guarantee that there might be any increase in prices. There's more evidence that prices will continue to go down because the houses are just so expensive these days that it's just going to be a struggle. So finish off my point about buyers is that the buyers I have that are actively looking for homes, unless they desperately need a home, it's been very slow out there. So you could look at 10, 20 properties, and if they find one thing wrong with the property or the price just doesn't make sense, they're either not going to go see that house. So I have that situation, a lot of listings where, the clients want a certain price, and you have to just tell them straight up, like, hey, chances are we're not going to get this price. And if the price is too high, just not what we call fair market value, then people are just not going to come at all. The problem is that, going back to my point about homes in inventory, at the beginning of the year, we had 1.5 months of inventory. Now, on average, we have about 4 months of inventory, which means that only 1 in every homes will sell per month. And that number is continuing to increase. So once we get to 5 or 6 months inventory, it's basically trending that way. Next month, it could be 5 months inventory, or, in January, could be 6 months inventory. Who knows, right? But because it's trending in that kind of a higher volume of homes, more inventory, buyers have a lot more options, but also so many other homes are available, and there's a lot more homes available at fair market value. And that fair market value is the current value that someone will actually buy that home today. So even 6 months ago, back in the spring, that was a lot higher, and right now it's a lot lower. So for sellers, actually, let's finish off the point about buyers. Buyers, it's a struggle, it's tough, and they're looking for the ideal home. It's got to be it's got to match all their criteria. I think the homes that really have a lot of value and they're really nicely put together are still selling. And on the topic, homes are still selling in general. It's just that if you're not competitive on the price, is not going to sell. So you can still sell all kinds of different kinds of homes. The price just has to match what is fair these days. And now moving on to the sellers. With sellers, they're really just forced to price aggressively. And for the first time in a long time, whenever we do a CMA, a comparative market analysis, a client says, hey, I'm interested in selling my home. Come over, let's talk about it. Every time at some point you're going to point out to comparable listings and say, hey, these are, let's say, 5 or 10 of the most comparable types of homes in the same area, in the same town, and they sold for this amount in the last, 60 days. Well, now you really have to look at how much did the home sell in the last 2 weeks, how much they sell last week. Every day that goes by is the most recent day, because the home prices have just been slowly falling and falling and falling. Buyers don't have that much money, and there's too many houses on the market. So you have to be competitive, or else your house will just not sell, or people will not even come. So sellers have to price aggressively. And my point with the first time ever that I was saying is that this is the first time in a while that I have to carefully analyze the houses that are already on the market. So for example, if you have a house you want to sell, you might look at other houses on the market. And as a realtor, you have to ask yourself, hey, what is the same house as the house that you have, that the consumer has, the vendor has, that is already on the market, that's the same or better? And you got to look at that price. If that price is the price that, let's say, the vendor wants or is comfortable with, you have to be realistic and say, hey, this is the price that we need to go with. You can't just put like 50,000 over that market value. You just have to be like 15, 20,000 over that market value. Otherwise, people won't come again. Otherwise, it'll just be a house that's just sitting there. There are so many homes that are not selling anymore. So many homes are expired. And it's really just tough to just imagine how things are going to really shape up. There's no real way to know for sure. But I do think that there will be changes. There has to be changes. Inflation isn't as high as the government wants. They always wanted to lower housing to make it more affordable for everyone, and they've done it. They've hypothetically lowered prices. It's certainly not more affordable for the buyer. And anyone that has, I think over the years, what's really happened here is that there's a lot of people that have pulled out equity in their home or used the money for renovations, whatever. And borrowing has now all of a sudden become extremely expensive and people are not used to it. It's a real shock. I alluded to the comment that, there are people that are going to renew their mortgage and they may not be able to afford it. My advice to you guys who are looking to sell a house is if you need a certain price, then just rent out that house or hold on to it for as long as you can. Because, selling means you have to respect the fair market value. You have to respect what an actual buyer will buy a home for these days. So, for example, I had a house in Hamilton. I listed it for $769,000 and no one came for a week. No one, nothing. Then I relisted it for $699,000, which is closer to the fair market value, as you'll see. And we had a bunch of showings, but no offers. Then I relisted it for one more time for $675,000. And we ended up getting a couple offers. Now you think of 2 offers is multiple offers. You think, oh, it was listed for $675,000. You will get $680,000 because there's 2 offers. You probably get more money. No, one of the offers was $620,000. Another offer was $650,000, and ultimately we agreed on $655,000. So you have to price your homes aggressively. If you're a seller and you need to sell, that's what it's going to take. If you are selling and you don't need to sell, then just hold on. Maybe you can just wait till the spring. Things might get better. Or if you're an investor, you can rent out the house. That's kind of a unique thing that's happening, is that there's a lot of homes that aren't selling, and the people that can afford to hold on to the homes, they're actually re-renting their house now, or they're renting it for the first time instead of selling it if they need a certain price. And so actually the rental market has kind of softened a little bit. Probably not in everywhere, but there's probably enough areas where people were really hoping for a certain price. And to further that point, when I mean hoping for a certain price, and I talked about how a lot of people borrowed a lot of money, whether it's refinancing or getting a heat lock, aka secure line of credit, and now they're paying, the current interest rates for these, which is around 6 to 7%. That it gets very expensive to hold on to this kind of debt. And I have numerous clients I know that have refinanced or they have heat locks and they want to sell their house. They need to sell their house. I have a client right now that bought a house for $1.25 million last year in the heat of the market. And it's for sale right now for $1,050,000. So at minimum over $200,000 less than what they bought it for 18 months ago, and they can't sell it. There's no offers. Now, of course, you can say, hey, the price is too high. That's literally the number one reason why a house won't sell is the price. Let's be honest. If you think your house isn't selling, you want to re-renovate it, don't do that. Not in this market. You're not going to get your money back. Just accurately price it. Now, going back to this client, and I know numerous clients like that. One of the problems with if you're a buyer, or this whole theory about buying a house for much cheaper, is 100% yes, you can buy a house cheaper right now than you were even a few months ago, before the summer. As soon as before the summer, you compare prices, they're definitely cheaper. They're softened. There's enough houses that are selling that you can say, hey, look at that house. This is the correct price. And it's just cheaper, right? Now, one of the problems is that people say, hey, when the market's like this, find a good deal. One of the problems I'm finding is that a lot of people that need to sell, they have borrowed enough money or too much, or they have too much debt, that if they don't sell for a certain price, and that's the problem I have with this client, is they literally cannot sell because they can't pay off their mortgage and their debts and their penalties for breaking and real estate fees. They literally would not physically, I guess it's just legally not able to close their house. And that's scary. So how can you get a deal on a house that if they reach a certain price, it's not worth it for them to sell, or they have to owe money on closing? Have you ever heard of that? It's so rare. Have you heard that someone's going to sell their house? So many years we've been talking about, yeah, one day you're going to sell your house, you're going to make a ton of money. But people are unable to sometimes go a certain price because it just doesn't make sense. The penalties are too high. They might have to owe 30, 50, whatever, 100,000 on closing just to sell their house. So that's why the rental market is softening up a bit. More houses are up for rent. There's a little bit less competition. Of course, the rental market's still crazy. Rental prices are still high, but they're softening a little bit, especially in smaller towns. And I think in bigger places, you have a lot of investors trying to sell properties now because they know at the current interest rates, it doesn't make sense. Very few homes are actually cash flowing positively now. So I'll give you an example. I was looking at some really nice duplexes in Brantford, Ontario. I think you can take this example anywhere really. It's just relative to what the market rents are and how much the houses were. But these are legal duplexes, and with an investor that's very serious. They wanted to buy something, and these home prices were like $700,000, and the rents were like $4,000 because one unit's like $2,400, another unit's like $1,600, whatever, and they pay the utilities. So it sounds good. It sounds good in theory, $4,000. Now, if you were to buy a $700,000 house, put 20% down because you're an investor or this is your second property, and you're going to take on a $560,000 mortgage, that's like $3,500 to $3,700 a month. Then you add property taxes, then you add insurance. I was finding out that basically any of these duplexes at those kind of prices, at those rents, were all cash flowing negatively. So on average, I would say the average, now you could find cheaper duplexes. These happen to be kind of nicer 40, 50-year-old bungalows where everything is legal and generally nicely done inside with fair market rents. Maybe not all of them exactly perfect market rents, but good enough. And so they were basically on average cash flowing about like $500 negatively. So who in the right frame of mind could now afford to buy a property? And there's already tenants in there. That's why I'm saying cash flowing negatively. You can't kick them out. It's not very easy. I got to tell you that. So I think the investors are really offloading some properties, and there's not a lot of people that are going to willing to take negative cash flow to purchase some of these properties. So when I looked at these duplexes for $700,000, it actually didn't even make sense to buy them unless they were $600,000. So if the interest rates stay high at 6%, which I doubt they will, I think that would really put the average Canadian, and I guess this affects Americans as well, in a lot of stress. It doesn't make sense. So either the house prices will go down more drastically, or sometime next year in 2024 they'll start lowering the interest rates. They'll never go down to, never say never. I don't think they'll go down to 2.5%, 3%, but they may end up going down to 4%. That may take a year and a half. We'll see. But I think the house prices, to wrap up this episode, house prices are bound to go down because people just can't afford 6%. There's too many houses on inventory. I know that there's a lot of immigration. I think last year we had like something like 1.3 million new people come to Canada. At least 500,000 were immigrants that were given resident permits, and others were students. So they all need places to live. They need places to rent, and a lot of them will buy. But does it make sense to buy something even with 20% down when you have to pay so much money? It's very, very, very difficult to comprehend that. Things are very slow. And the other thing is that the amount of foreclosures are up. I saw a study like 400%. So there's definitely going to be a lot of people that are just going to have to get rid of their home. Or like I said, they literally can't afford to sell the home because they don't have enough money. So they just have to tell the banks, hey, here you go. Here's the keys to my house. You sell it and you figure it out. Of course, they will probably get sued by the bank or they have to owe money, and chances are there'll be more people declaring bankruptcy than other years. But it's really tough out there. I do see an opportunity for people to get much cheaper homes. I have numerous clients that are looking for houses in under 600,000 freehold. And for example, Hamilton has got a lot of them now. All of a sudden, there are certain people that are very affordable. I have another client that's looking for a 2-bedroom condo townhouse for around 600,000 in Mississauga. Was that possible a few months ago? No. Do I see units? Yeah, I'm starting to see some units. And now that they're starting to see units, they're taking their sweet time, which is, I think, is fair. I think as whether you're an investor or a buyer, you should hold out and wait for a good deal. I think they're bound to happen. I do think that there's always a chance that in the spring, maybe they lower the interest rates, or maybe the amount of homes, people pull their homes off the market, they just can't sell it, and there's just less inventory. But this is the first time I gotta say that there's no way I can predict a positive appreciation over the next year with any certainty. Yeah, I didn't even know if that was going to happen this year, but in the spring it did happen. But then they raised interest rates again by 50 basis points, twice by 25 basis points. So whatever you're going to do out there, I think the best opportunities are to buy some good properties cheap. Some people will have to sell their properties much lower just to move if they want to. I mean, it's not bad to move in this market. Just you have to sell first, because selling has become a lot harder. And remember, if you're selling lower, you're buying lower generally. If you're downsizing, I think it's not going to be like as good of a deal because there's more people buying cheaper places. So the prices for the least expensive homes are going to be a little bit more stable long term. But the more expensive homes will definitely go down. If you're upsizing, I think that could be better. This maybe could be the best time to upsize. I guess you just have to decide if you're, let's say you're porting a mortgage, you're moving a mortgage to a new house, and it's going to cost you another $200,000. Well, $200,000 at 6%. Mortgage, in addition to your current mortgage, is that affordable? Will you be happy? It's very, very tough, guys. Very, very tough. Know what to do. But if you ever have any questions about a situation you're in, or some for a friend or family, and you want to know whether you should be buying, you should be selling, how to save money, what kind of first-time homebuyer programs that you can look forward to actually take advantage of the market and where it's at, then hit me up or check me out on dukerealtyhomes.com and email me, get back to me, and I'll give you some good advice. Okay, guys, with that, thanks for listening, and good luck out there. Happy Halloween.